there's a big ecosystem that's happening in the Southeast that a lot of people don't realize that it's vital to the economy. So that's why we invest there.
Hey everybody, welcome back to another episode of the Richer Geek Podcast. Today we have John Brenard. He's a founder, managing director of Southview Timberland Investments. And over the past 15 years, he's gathered extensive experience in wealth management, alternative investments, and he's found a niche that we're going to talk about. At Southview, he focuses on timberland and agricultural investments in the Southeast U.S. How you doing, John?
Hey, Mike, I'm doing very well. It's a pleasure to be here and looking forward to diving into this asset class, which I'm sure a lot of your users have, maybe at the most a baseline knowledge of what it is. So we can do a deeper dive on what we do. So.
Yeah, because a lot of it is, well, I hike through the forest. I do this and I do that, and I see this, and it's what is it natural land or is it federal land? Who owns it? And it's amazing how many funds or individual people actually own, thousands and thousands of acres. Um, John, before we dive in, give us a little bit brief history of who you are and how you got involved in this type of investment.
Yeah, we'll dive into all of that. We'll dive into, where the assets are located, why we like investing in that region. We'll touch on all of that, but yeah, I think it's helpful to kind of give you the origin story of Southview and how this whole business got started. And love telling the story. It's a personal story. So just to back up, like you mentioned, yeah, I started my career in more traditional finance, traditional wealth management. Did that for the first decade of my career, had a successful business doing that, scaled it to over 100 million in assets under management, had great clients, really loved the business, but I caught the entrepreneurial bug and just wanted to kind of strike out on my own and do something and build it from the ground up. So I kind of tiptoed into entrepreneurship when I joined a company where I was an investor and I was an early employee in that business. And we built that company and sold it to a publicly traded company. So that was kind of a successful foray into entrepreneurship. So really, I built two successful businesses in my career so far. But your listeners are probably wondering, where does the timberland come into all of this? That all started in 2008 when my family bought a timberland investment in South Georgia. And so when I was still building my wealth management business, I would get on that property for recreation. We planted loblolly pine trees on it for an investment. And I saw basically the way that the asset class worked, saw almost a full cycle deal in all the years that we managed it. And that's also where I met my business partner, Terry Myers, who self-made guy. He's been investing in timberland for over 30 years. And when I would get on the properties with him, he would take me out and show me other timberland deals. And when I started to have the means in my wealth management career, and then later during that startup, I started doing some my own deals with him, putting my own money into deals, learning about the asset class firsthand. And I said pretty early on, hey, Terry, when the time is right, we should put together an offering to present this strategy to a broader set of investors, because it's hard to get direct access to it the way that we do it. We can talk about the other vehicles that are available to get exposure to timberland, but that's where we are today. About 2 years ago, we launched the business to offer this strategy to more investors, and we're off to the races. So,
And it's important that we have options. A lot of our listeners are high-paid employees. Some of them are founders, and they're looking there and say, you know what? I like my lifestyle. I'm making a lot of money, but I lose a million, I gain a million at the stock market. It's just, is that something I can trust when I retire? Can I have the same type of lifestyle when I retire, especially as they have kids? So the option, that Tenderloin, how does that approach fit their need and that diversification process?
yeah. So in all of my time in wealth management, working for firms that all of your viewers and listeners would recognize. I can't remember one time when a Timberland fund came across my desk. It wasn't an option for them. And it's a shame because the large endowments, the institutions, they have exposure to it. They have direct exposure to the asset class, and they've been doing it for decades because they recognize that it's a great ballast for the portfolio. It's very stable. It's a great inflation hedge. It's uncorrelated to the stock market. The returns that we generate are not tied to corporate earnings, right? It's tied to biological growth and the steady appreciation of land value. And so it's a great complement to those traditional investments. I'm not saying, investors shouldn't have exposure to the stock market or the bond market or other alternatives, but a 3 to 5% exposure to timberland in a portfolio helps dramatically with the risk-adjusted returns. And there have been studies done with real assets being added to a portfolio and what it does for the risk-adjusted returns. Studies done by brighter minds than me, but thankfully I get to use those studies in what we talk about on a day-to-day basis with investors. So it's proven, great inflation hedge, something that's uncorrelated, and I thought I'd just mention here too. JP Morgan, they bought a timberland investment group called Campbell Global about 2 years ago because they realized that natural capital, real assets belonged in their investors' portfolio. They're now advocating a 3 to 5% exposure to their private bank clients to timberland. And so if JP Morgan's on board, I feel like they do a pretty good job with investing, so we feel like we're in the right spot.
So how does owning land, I've had people on here that just own land, and it just sits there. No one's getting any money. There's no dividends. There's no, monthly payouts. How do you differ? We're talking about timberland. People are thinking, well, what does John do? He just goes out and buys land. But you're doing something else. You have all these different avenues, different diversified avenues within the timberland that has income. So tell us a little bit about, you're not just buying 1,000 acres of land somewhere.
Correct. Right. We're not going to, the middle of Texas and buying, 1,000 acres where there's no, timber markets. We're not doing that. I think it's important that I set the table about the region that we're investing in. So I think I've mentioned we're in the Southeast U.S. Specifically, the areas that we invest in are South Georgia, parts of North Florida, South Carolina, Alabama. And a lot of folks don't really realize the Southeast is the number one lumber producer, timber market really in the world at this point. It's surpassed the Pacific Northwest. It's surpassed Canada. And so we invest in a region that has very stable markets. There's high demand for the land that we purchase. So these are very productive assets that we're buying. It's when we're buying timberland, we're buying in an area that has a very strong mill infrastructure. And so if we buy 1,000 acres of timberland, you have to have a mill close by to turn that into different products. And these aren't the mills that maybe people have in mind of, a single or, couple people operating at them. These are large facilities. These are owned by multinational companies. They've made hundreds of millions of dollars investments in these mills that produce all of the products that we use on a day-to-day basis. So all of the Amazon boxes that show up on your doorstep, every other day, those are manufactured in our region, right? The large dimensional saw timber that we build the 1.5 million homes in this country, because we need around 1.25 to 1.5 million homes built in this country on an annual basis. The lumber that we build all those homes with are produced in our region. So we buy land that is close to the mill infrastructure. The mill is who is actually purchasing the timber that we produce. We simply manage the land, we manage the timber, and then when the prices are right, we work with the mills and the loggers, right, for them to take that product off of our land to sell. So there's a big ecosystem that's happening in the Southeast that a lot of people don't realize that it's vital to the economy. So that's why we invest there.
Yeah, that makes sense. It's like out here in Arizona. Well, we thin the forest.
Mm-hmm.
We do firewise and send off that to the mills. Do you think that you've surpassed like the specific Northwest? I'm not going to get into politics, but it's just kind of they don't. Is it that you're just growing that quickly, or is there some policies that are kind of hedging against that type of an area, saying that, hey, we need to preserve our forest. We don't want this. Are you seeing that around different areas?
Yeah, there's some of that, going on in the Pacific Northwest. There's, I mean, for example, Georgia is the number one forestry state. It's one of the largest employers. It's an extremely important industry to the state of Georgia. So the leadership of that state is not going to impede, right, that industry with a lot of regulations to operate in the way that we need to. Whereas the Pacific Northwest, they may have other industries that are supporting the tax base there or what have you, employment, right? In the Southeast, these rural jobs are so important and vital to the economy. And so the leadership there understands that, and they support, the industry, and they're going to actually, do what they can to be a catalyst for the industry instead of taking away from it. So, not to get into the politics of it, it's just a huge industry in the Southeast, and a lot of people depend on it for their livelihood. So
Now, how do you have some competition out there, and someone may see, fund with one of your competitors or another type of thing. What makes the way that you find it in that Southwest, and we talked about a little bit, has to be around mills, but how else are you different from your competitors?
yeah, so I'll lay out the different ways that investors can get exposure to investing in timberland. So really the easiest way to do it is there are three publicly traded timber REITs right now. There's Rayonier, Weyerhaeuser, and PotlatchDeltic. So those are publicly traded REITs. You could go to your Fidelity or Schwab account right now, and you could buy those today. And they own a portfolio of millions of acres of timberland, right? With that public vehicle, though, you get the public market volatility, right? So in the 2008s, in the COVIDs, right, those move with the public market. So it's not really the uncorrelated benefit that you get by owning the asset directly. So that's the easiest way to get exposure to publicly traded REITs. On the far end of the other end of the spectrum, there are groups called TIMOs, Timberland Investment Management Organizations. There's a number of them throughout the country. And what these groups do is they work with institutions, family offices, and they will build you a custom, separately managed account if you have 50 million, 75 million, 100 million to invest, right? Sometimes more. Right. So that's another way that's a good way to get exposure to the asset class, because they'll build you a diversified portfolio, but extremely high minimums. So where Southview comes in, and the Southview Timberland Fund, is you're going to get that TIMO-like experience at a much lower minimum. So the minimum for our fund is 100,000, right? This fund that we're raising is a $50 million fund. So it's a lot more concentrated, right? You get that hands-on approach. And how we source properties is from our network. We've been doing this in the region for 30 plus years. We have a deep network of acquisition specialists on our team. We have relationships with the brokers, right? Doesn't mean that we're buying products through brokers, on the listed sites, right? Because once it's on the listed sites, right, it's no longer a deal. And so it's really this asset class is very difficult to invest in if you don't have those relationships. You can't do this from a Bloomberg terminal, right? You have to have boots on the ground. And that's what we offer is we have guys that wake up every day. They're looking at deals. They're riding around, talking to landowners, talking to fellow investors, talking to foresters, right? They know the families, the large families that still own property. They're the third or fourth generation maybe doesn't want to own it anymore. And that's where we get our deal flow from. So we can typically get a nice discount on the purchase price compared to the market. And it's simply because we do what we say we're going to do. I mean, we are known as active buyers. If we say we're going to close on a deal, we follow through on that. So that's a huge edge for us in our deal sourcing.
And you're small enough to be, the investors aren't just numbers.
Yes.
And I think that's very important nowadays as I do funds in different syndications that they say it's like, you know what, you're not, they can contact you. They can get a hold of the founders in a way that you can't maybe through a REIT or a much larger. And people like that more of a personal touch, don't they?
They really do. And we've been onboarded to the Charles Schwab Alternative Investments platform. So if anybody works with Charles Schwab or has a Charles Schwab advisor, we are on that platform. So you can see the Southview Timberland Fund on your statement. But we're really seen as a partner to the financial advisors that we work with. We're a differentiator. And yeah, it's really, something that people are looking for these days is the real assets, something that's tangible, something that they can put their fingers and toes into.
Yeah, I agree. Now, you talked about timber harvesting. What else do you do with that land that you generate income from?
Yeah, so it's not simply buying a parcel of land, planting trees, and waiting 25 years to harvest, right? That is a way that some people manage their land, right? But we're a lot more opportunistic. And although a $50 million fund for some folks may seem like a large fund, and it is. I mean, I'm not making light of that. But compared to some of these other groups that are managing millions of acres, I mean, and I'm being serious about that. I'm not just being flippant by saying that. They don't have, even with the large teams that they don't have the ability to be as hands-on as we are at our size. And so our intention is really to stay fairly concentrated, stay within, the size funds that I'm talking about, getting maybe progressively, larger as time goes on, but staying within this zone that I mentioned in the Southeast, because we can just get our hands on the property to extract as much value. And so the different ways that we do that is obviously timber harvesting is a big way we generate returns. We are able to do things like farmland. So if we buy 1,000 acres of land and maybe 300 acres of it is better suited to be in farmland, we may go clean up that property, make the investment to drill a well, irrigate it, and then we'll lease that out to a professional farmer for a nice cash rent. And that irrigation that we did improved the land value as well on the resale. We do recreational leases. Recreation is huge. Hunting, and people just who just want to have an urban retreat. They want to get away from the cities. That's become very big in our area. So we get leases for people to use our land for recreation. We're also seeing a lot of opportunistic land sales. We're doing a lot of opportunistic land sales, meaning that, again, if we buy 500 acres, 1,000 acres, it might make sense for us to sell 50 or 75 acres to a recreational buyer at a much higher price per acre, which creates additional return for the fund through those opportunistic sales. The population continues to grow in the Southeast. That puts upward pressure on land prices, just more demand for land. Some of the properties that we currently own in our personal portfolio, we have developments that are bumping up against us that need more land for expansion, and they pay us a much higher price per acre. So we're always looking to be about an hour or two outside of the major cities, still very rural areas, very good for timberland. So we always have that timberland put, right? So we always have the timberland returns protecting us. But as the Southeast continues to grow and the population grows, we're in that path of progress. So the land prices can appreciate with that growth. There are other ways, we generate returns, but if investors book time with me, we can talk about those as well. So.
Sure. Something that's probably on the forefront of a lot of our listeners' minds is sustainability. It's very important nowadays. How do you take care of the land while generating income and still be a sustainable product?
Yeah. So, ESG these days seems like it's persona non grata for some people, but sustainability, as that whole movement, took off the last decade or so, in timberland, our asset class has always been sustainable. When we harvest a plantation within 12 to 18 months, when we harvest a pine plantation within 12 to 18 months after cleaning it up, we're replanting it. And that's not only good stewardship, right, of the land, that's not only makes it sustainable, but that's good for returns as well. Because when we go to resell that property in 3 to 5 years and the next investors see that there's a good stand of a pine plantation, right, they're willing to pay a premium because we made that investment in that stewardship. And it's just good for the next generation too. So, stewardship, good forestry practices, good land management. You mentioned earlier, thinning the forests in Arizona. We do that as well, right? As the pine plantation becomes more established, we'll go out and take out every third row to allow that canopy to expand, to get more production. Just good forest management, good stewardship, and sustainability are part of everything we do at Southview, because that's our asset, right? We have to take care of it. We have to manage it well, because the next investors, they're going to notice if we didn't take care of it, and we want to get that premium for our product when we go to sell it.
Let's talk about the fund a little bit. What kind of returns do you aim for? I guarantee none of our listeners right now have ever heard of a Timberland fund.
Yeah.
You were the first one. So, what kind of returns? How long do you mentioned maybe 3 to 5 years? Someone comes in and says, here's $100,000. What do you think I'm going to get, and how long is the investment?
Yeah. So we wanted to make this very, very investor friendly, easy to understand. The terms of the fund, very straightforward. It's a 5-year fund. Most timberland funds, timberland strategies are much longer than that. They can be 7, 10, 12, up to 15-year long commitments, because they're just managing on a longer cycle. They're not as opportunistic as we are. So we're only a 5-year fund. During that 5-year period, from day one, with all the ways that I mentioned that we generate income, we're going to be looking to make distributions. So there's going to be cash flow with this investment as well. We're targeting a 6 to 8% distribution on an annual basis from the fund. So it's not going to lock your money up for 5 years and you're not going to see any returns. We're going to be looking to return cash flow. But pretty straightforward. 100,000 minimum investment. And what was the add-on to that question, Mike? What was the other part of that?
Well, I think you got it was, the 5 years, 68%. I assume accredited investor.
Yeah, it's for accredited investors. Yeah, so a 6 to 8% dividend distribution is what we're targeting. Yep. We are targeting a 12 to 15% IRR total, right? So part of that is cash flow, part of that is appreciation. It's for accredited investors. We're working with best-in-class service providers. We're really having, set this up to have an institutional feel from the beginning. Quarterly reporting, quarterly updates, and also, ad hoc, webinars. We do semi-monthly emails with updates, just being very transparent. We welcome site visits as well for any investors who want to come see the land. We do those all the time. Investors come and see us, and we take them around and show them properties. So our door is always open in that regard.
And do you use debt or you usually pay in cash?
Yeah, so historically we haven't used a lot of debt. You within the fund, if it helps maybe to, for short-term needs, we can use, some debt, but historically we haven't used leverage. And really the simple reason for that is we feel like the returns that we're able to generate without debt are favorable. And that just it de-risks the investment for us. Not being beholden to a bank for a debt payment, influencing our decisions. That's just something that we haven't done personally, and we haven't been doing in the fund. So,
Mhm.
not a whole lot of debt in the fund.
Yeah, that's good. One of the things that is on everyone's mind right now is I think the word of the year so far is tariffs.
Sure.
And how's that affecting, especially the lumber part, the timber part of your deals?
Yeah. So in August of 2024, before Biden left office, he actually increased the tariffs on Canadian lumber before he left office. He increased it by 80%. So it was at an 8%, and he increased it to, I believe it's 14 or 15% tariff. So before Trump got into office, we were already, going after Canadian lumber coming over. And it's not that we were doing that to be predatory or to
Mhm.
hurt Canadians. The simple reason is people don't realize is a lot of Canadian lumber is subsidized by the government. The industry is heavily subsidized, and so they have a huge advantage when it comes to production and what it costs for them to produce their product. And so to level the playing field with American producers, we've always had some type of tariff on Canadian lumber. Now with Trump coming in, right, those have increased, right? But at the same time, that administration, the Trump administration, has also put an executive order in place that came out on March 1st that we were going to focus on American timber production.
Mhm.
And so I really think, setting the tariffs aside, that's really where we should be focused is we have these great natural resources. And I'm not talking about going into protected national forests, right? The news does a good job of saying, hey, they're going to start harvesting national forests.
I know.
That's not what we're going to be doing, right? There may be some cleanup that happens in those, which is just good forest
Hmm.
management. But we have set up in this country, in the Southeast and the Pacific Northwest, these timber industries, which again, in order for that to make sense from an economic perspective, you have to be close to the mill infrastructure. You have to be 50 to 100 miles. And so, really focusing on those natural resources here in the US and getting the most out of them, managing them sustainably, I think is the right path forward. And it seems like the administration recognizes that, and that's what we're doing today. So we see all that's happening as a boon for our
Yeah.
industry, a boon for American workers in this industry. And it's still fairly early days to tell, but we see it as a boon for our industry.
Yeah, and it seems like, that's the agenda for those policies is to boost what we have, our natural resources, and among other things like steel and those other types of industries. But why not put money in Americans' hands, American workers? So, I think, like you said, we will see, but I'm hoping that those types of things will boon the industries that are based here in the U.S.
We're seeing it already. I mean, just
Yeah.
an anecdote. I mean, we talk to builders all the time, and if they can source Canadian lumber with the tariff or Southern yellow pine without the tariff, they're going towards that product. And so, we're already seeing that it's been a benefit for our industry.
Yeah, and I'm already looking at them getting ready to build a hotel, and I'm like, a year ago it's like, oh man, lumber prices are just, man, I can't afford. Do I go with steel? Do I go with concrete? I mean, but now it's like, yeah, I think it's all coming down to a more of a medium, and I'm looking forward to maybe some better pricing on some of that stuff. But before I let you go, how can investors, people are interested, they want to know a little bit more about Timberland. How can investors access your fund? And you're saying this through like Charles Schwab and some of the different advisor platforms, but you also have like a portal link or some information on your website.
Yes. So the best way to learn more, reach out to us directly, info@southviewtimber.com. One of our team members will get that email. We'll set up some time to, see if this is a good fit, for your, for your strategy. And yes, we make it very easy to subscribe. We work with a best-in-class fund administrator. So all of the subscription process is done digitally. We make it very easy to get an account set up, and we'll hold your hand through that whole process. So also available again on the Charles Schwab Alternative Investments platform. If you work with a Schwab advisor, they can help you just get, send a note and we can get connected. And if you work with a different platform, Fidelity, any of these other platforms, and you're interested in the fund, let's talk about it, because we can get onboarded to those custodians as well, and we can work for them as well. So reach out directly, info@southviewtimber.com.
And I like that, because, and some of the founders that are listening today, we have a lot of these tax divert, and putting money into these different Schwab accounts and different diversification as founders. And it's something that I might reach out to my Schwab guy and say, hey, I kind of like this alternative fund here. So you might be getting a phone call from me also. Is there anything, John, that I haven't hit on that you'd like to, before we leave, that you'd like to let our listeners in on?
Mike, I think that was a great high-level overview. Appreciate the thoughtful questions, and appreciate the time with you today. And I hope I was able to impart some knowledge about the timberland industry, and looking forward to continuing the conversation with those that are interested. So thank you, Mike.
You're welcome, everybody. It's another episode of the Richer Geek. John Brenard, Southview Timber. Check him out if you want to diversify your portfolio, or if you're just curious. Take care, John.
Thanks so much, Mike.